What is up, everyone? It's your boy Kev. Welcome back to yet another video. Today I'm going to be sharing with you guys a Nasdaq strategy that I have been using for quite some time now. And to actually best explain the strategy, I want us to look at what price actually did the previous week, last week. So we're going to be looking at this candle, not this one. We're going to be looking at this one to see what exactly happened. And the first thing that I like doing on Nasdaq is to identify where price is situated. I feel like it's better to trade when price is at a level of resistance and at a level of support. But when price is just floating in the air like this, I feel like it's harder to trade it because you're not really sure where price is going and it could reverse at any time. It's not easy to just keep buying when price is pushing like this, and it's also not easy to predict a sell when price is just like this. It is easier to predict where price is going when you can see the whole market and you can also identify where price is situated. If you want to take a buy, let's say somewhere right here, let me just highlight this level so that you guys can see. If I want to take a buy somewhere here, it's easy for me to identify where price is situated within the overall market. So if I were to mark my highest level and my lowest level right here, and to identify where price is actually situated. If I'm looking for this and to actually determine whether price is going to be going up or down, I can clearly see that price has been making, this was a support level right here. If I stretch it out like this, you can clearly see that this is a support level, support, and this was a resistance level. Price pushed up, it gave us this bearish candle with a rejection. This rejection tells us that price was actually, there were buyers within the market, and it was easy for me to determine that price was actually going to start pushing to the upside. So I feel like it's better to trade when the price is within a market that has a lot of detail like this than to actually try to predict where price is going when it's just moving like this. So I avoid when the market is actually, I avoid trading when the market is moving like this, and I prefer trading when the market is giving me a lot of detail like this, because I can clearly determine where price is situated and whether it's going to be pushing to the upside or to the downside. So, but like I said, we're going to be looking at what price actually did the previous week. So we're going to be looking at this candle. When I look at the market like this, I can clearly see that the market was actually moving in a downtrend. It was making lower lows and lower highs. So these are lower highs, price pushed all the way to the downside. When I draw a trend line like this, I can clearly see that the market actually broke out of this trend line. So it pushed up with this huge impulsive candle right here. It retested, it pushed all the way to the upside. Now it came back for a bigger retracement. What you also have to understand about the market is that it likes doing this. It likes making a first break and then coming back for a bigger retracement. And this on a smaller time frame would then start forming a big uptrend to move all the way to the upside. So this is just a minor retracement to push the market out of this trend and come back for a bigger retracement, and this would typically be the start of a new trend. So if I were to hop onto a 30-minute chart right now, you guys would clearly see that the market is actually starting an uptrend. So this is when you would start to look for your buys to push all the way to the upside. So when I stretch this thing out like this, you can clearly see that the market was moving in a downtrend, pushing all the way to the downside, and now it looks like it's starting to reverse. So it wants to start pushing all the way to the upside. So this could be the start of a new trend, and the market could start pushing all the way to the upside. You just have to find your nice retracement levels and start pushing all the way to the upside. So you can clearly see that the market actually broke out of this downtrend and it's starting to form a new trend right here, and it's going to start pushing all the way to the upside. But let's go back to the weekly chart so that we go step by step and I show you guys exactly how you go about doing this. So coming back to the weekly chart, we can clearly see that the market actually broke out of this trend line right here, and it looks like it's going to start pushing all the way to the upside. And what I like doing from there is hopping onto a smaller time frame. So I would then go to the daily chart to see what's going on. And remember, I only trade when the market is at a level of support or resistance, and I avoid trading when the market is moving like this. So I wouldn't actually trade when the market is moving like this, because it would be hard for me to determine where price is, unless when I look to my left and I can clearly see that price is actually breaking levels and pushing all the way to the downside. But here we can clearly see that it broke out and it was making lower lows and lower highs, and it touched this level, and this could be a start of a new trend. We could start seeing a reversal right here. So what price actually did last week, we can clearly see that it came to the support level, and it is also complemented by this trend line right here. So price came all the way to the downside, it hit the support level, and it also hit this trend line right here, and it started reversing. So let me just mark this candle. So this green candle right here is the one that we're looking for. But what I want to show you guys is this bearish candle and what it actually did. So we can clearly see that the market pushed all the way to the upside, and it gave us this reversal candle right here with a huge tail. So this exhaustion, I want to show you guys what this exhaustion actually means. So the market pushed all the way to the upside with this huge green candle right here, and right after that the market opened here. So it opened like this, and it went all the way to the downside. It came back and it closed like this. So this is how the market looks. And when we look at this, and when the market forms something like this on a support level, we know that there are very high chances that the market can actually start pushing all the way to the upside. So this is what this candle actually means. That's why you want to look for candles like these on a support level, because what they mean is that if market actually pushed all the way to the downside, it hit our level of support, and it started rejecting that level, and it is stuck at a higher price. So I just want to go to a smaller time frame so that I can show you guys what actually happened there. Let me just remove this. So when I hop onto an hour time frame, I just want to show you guys what happened there. So that huge candle was this one. The market actually pushed all the way to the downside, and it rejected. It rejected by pushing all the way to the upside, and it got stuck somewhere here. So it stuck at a higher price. And on smaller time frames, you could actually start looking for buys. But when the market is actually stuck like this, I don't like taking buys unless I know that price is at a support level. So if I were to stretch out this line like this and determine that price is indeed at a support level, that's the only time I would actually start looking for buys. We can clearly see that this was a resistance level right here. Price pushed above it, it came back to this, and this was support, and it pushed all the way to the upside. So if I can determine this, I know that if I'm going to be hopping onto even smaller time frames like your 15-minute chart, remember Nasdaq is very volatile and it can pay you very quickly, but conversely you can lose a lot of money very quickly. So from a bigger time frame, I was able to determine where price was actually situated. Remember, I only want to trade when the market is situated at a support or resistance level, either a horizontal support, or I can see a trend line. That's the only time I'm actually interested in looking for setups within the market. I don't like trading when price is just moving in weird moves. So we can clearly see that price is actually at a support level right here. But when price actually opened, we can clearly see that it was at a higher price. It wasn't exactly at our support level right here. It wasn't exactly at our support level right there. It was a little bit high, so we had to wait for price to come to the downside and retest this level right here. You can clearly see that we have a lot of rejection candles right here, a rejection there, and then price started pushing all the way to the downside. But when price actually came all the way here, let me just hop onto a 5-minute chart so that you guys see. Remember, with Nasdaq, you want to make sure that you trade on smaller time frames because it can be very volatile. It's hard to set a stop loss on a daily chart because it's going to be a huge stop and it can wipe your whole account. But when you trade using smaller time frames, or when you place your entries on smaller time frames, your stops are going to make sense and you're not going to be risking a lot of capital. Again, the market actually broke out of our support level and it was a little bit high right here. We had to wait for it to at least come back right here. And that's exactly what it did. It came back all the way to the downside. And from here, this is when you would actually start looking for your buys. Typically, when the market is approaching my support level, I would start looking for bullish engulfing candles, or I would look for reversal patterns. This can be your inverse head and shoulders or even double bottoms. But right here, I can clearly see that the market pushed all the way to the downside and it gave us this candle. I wouldn't really consider this a bullish engulfing, because when a candle is engulfing another one, I wanted to completely, if we have a candle like this, I wanted to completely engulf it like this, so that I know that there's a lot of bias within the market. I wanted to completely engulf this candle and push to the upside. So right here, we can clearly see that the market didn't really make an engulfing candle, but I know that if I were to hop onto a smaller time frame, these wicks actually tell me that if I were to even go to even a smaller time frame like your 1 minute chart, I would actually get a head and shoulder setup. Let me just go to a smaller time frame and you guys are going to see exactly what I'm talking about. So this is our 1 minute chart. I was actually hoping to see an inverse head and shoulder right here, but I can see that it didn't form exactly the way that I thought it would. I actually saw a wick right here and a wick right here, and I thought this would actually simulate an inverse head and shoulder like that, but it didn't really come all the way to the downside. But what I like about the 1 minute chart is that it gives you a lot of detail and it actually shows what the market did. The market actually pushed all the way to the downside. We're making lower lows and lower highs. And after approaching our strong sensitive level right here, the market actually started breaking out. And I would actually advise taking this break right here. And the reason why I would say it is advisable to take a trade here on a smaller time frame like your 1 minute chart is because a retracement level on a smaller time frame is not that big of a move. So if the market was actually to push all the way to the downside like this move would not cost you a lot, because this is a smaller time frame and the market actually moves in small increments because it is a 1 minute chart. But if this was a daily chart or a weekly chart, if 1 week candle was to push all the way to the downside, it would be a huge move and it could wipe your whole account. So when you hop onto a smaller time frame and you see a break like this one, you can actually take that break, because even if the market is to go to the downside to retest this level right here before pushing all the way to the downside, and you actually placed your stop, let's say somewhere right here, this trade would make a lot of sense. Even if the market pushes all the way to the downside, you wouldn't lose a lot of money because this is a 1 minute chart and it moves in small increments. So but after this break, we can clearly see that the market started pushing all the way to the downside, and this was going to be a good trade to start pushing all the way to the upside. So you would place your SL right there, and it's 13 pips, and price pushed all the way to the upside. So depending on what you see on your left, that's how you would actually set your targets. But this was a beautiful trade. And the market even ended up pushing all the way to this level right here. So it pushed all the way to that level right there. And that's how you would have actually taken this trade. So remember, what I do is that I hop onto a bigger time frame like your daily, or even start on a weekly chart, and I only want to trade when the market is at a level of support or resistance. I don't want to trade when the market is just moving in weird directions. I want to know the positioning. So the most important thing is the positioning of price. If you can correctly identify the positioning of price, and you know that price is either at a support or resistance level, it's easy for you to start making decisions from there on. But when you hop onto the chart and you don't really know where the market is positioned, so let me just give you an example. If the market is moving like this, so if we have this candle right here, it's not easy for us to determine where price is going to be going. You can't just decide that the market is going to push all the way to the upside or to the downside if it is impossible for you to determine where price is actually positioned. So you want to know the positioning of price. Is price at a support level or a resistance level? In this case, we were clearly able to correctly identify that price was at a support level. Given our data on the left, we saw that the market actually gave us a strong level of support. I just want to go back to our daily chart so that you guys can clearly see how we were able to get this level. And when we hop onto our daily chart, I just want to show you guys Again, how we were able to catch that move. Remember, price actually broke out of our trend line. It came back to this strong support right here. So price came to this support, and when we hop onto a 4-hour chart, everything else just started making a lot of sense. Price was at a level of support right here. We can clearly see that this was resistance, and over time price pushed out of that resistance. It came back to this level and retested, and it started pushing all the way to the upside. When we move even further to a smaller time frame, this is where it is actually more clear. You can clearly see that this was resistance. Price just pushed down a little bit. This was actually a corrective move to continue pushing to the upside. But the fact that the price actually pushed down, broke out of this level, retested this level, and started pushing all the way to the upside actually tells us that this is a correct level that we can use to start looking for buys to push all the way to. So after determining this level, smaller time frames are the ones that are actually going to give you nice entry points. So when we hop onto a 5-minute chart, you can clearly see that we were able to identify that this was a resistance level because we see a lot of rejections right there. Price actually came crashing. It retested this level and it pushed all the way to the downside, and we are back at this level. We were able to correctly identify the positioning of price. So when price actually started coming back to this level, we were able to determine that it broke out of our trend. This is our trend right here. Price was making lower lows and lower highs, pushing to the downside. But I like the 1-minute chart because it clearly shows you the details of what price is doing. Remember, you want to be very careful trading NASDAQ or US 100 because it is very volatile, and tiny moves can actually make you a lot of money. But conversely, tiny moves can also lose you a lot of money. So it is advisable to take your trades on smaller time frames. Your 5-minute chart, or you can start from 15, 5, and sometimes even 1 minute. The reason for that is because your stop is not going to be too big, and you're going to be able to risk less than what you're trying to gain. So this is the trade that you could have taken right here. The market started pushing all the way to the downside. When it broke out of this trend, this is when you would actually start taking your buy, or you can actually put your SL all the way to the downside like this. It is still a reasonable stop, and price was actually able to push all the way to the upside to give you 100 pips, and this would have been a very good trade to take. So this is the strategy, guys, and if you actually gain value from this video, do hit the thumbs up and subscribe if you didn't. I'm going to be making a lot of content, so if you want to learn more about how I analyze the charts and how I approach the charts, do subscribe because I'm going to be providing a lot of valuable content. Peace.